Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. So in this video, we are just going to be diving into a sniper entry and exit scalping strategy for the 1 minute time frame. All right, we're going to be focusing on the 1 minute time frame for our sniper entry and exit scalping. Okay, this strategy is perfect for those who love speed, structure, and precision in their trading. Now, scalping the 1 minute chart is intense, right? There is no room for hesitation, no room for sloppy execution. That's why sniper entries and exits are key. All right, you are aiming to strike with accuracy, not volume. Okay, you're actually aiming to strike with accuracy. All right, so let's just quickly break it down. Now, a sniper strategy is about waiting for the perfect setup, not taking every opportunity that comes your way. You want confirmation, structure, and momentum, all right, all in your favor before pulling the trigger. So now, in a 1 minute time frame, this means identifying micro market structure shifts, key reaction zones, volume surges, or strong candle closes. Now, you also need to get a confluence from an indicator or two, but not overload. Okay, now you start by looking at support and resistance on the 5 minute and the 15-minute charts. Okay, so we have to identify our support and resistance zones on the higher time frames. Well, since we are scalping on the 1 minute, we can just use the 5 minutes and 15 minutes as our higher time frames in quotes. All right, so we're just going to use these time frames to identify key support and resistance zones on the chart. Once we are done identifying these important zones, we will now go down back to the 1 minute chart to execute our trades, to look for good opportunities in the market. Okay, so right now I'm on the 15-minute chart, just plotting out my zones. Now I'm going to go back to the 5-minute chart, and as you can see, the 5-minute charts are, price action in 5 minutes is already respecting the price action in the 15 minutes. So now let's just check if there is any other important price points that we need to map out on the 5 minutes. If there is none, we're just going to go down to the down to the 1 minute. Okay, let's see. Okay, I think we are good to go already. Now we're just going to go down back to the 1 minute, right? We're going to go back to the 1 minute chart. Okay, so basically you'll be looking for price reaction around these key zones that we plotted on the 15 minutes. Okay, you look out for break of structure, change of character, rejections with strong weak, strong weak rejections or engulfing candles. So these moments are where your sniper entry will come from. You are not entering blindly. You are waiting for confirmation that the level is holding or breaking with momentum. Okay, for example, you can see how if you had picked a buy trade around here, can you see it would have been a sniper entry for this move? You can see that because it got rejected. Here again, got rejected, went all the way up to this point. Here again, it got rejected and it's already climbing back up, possibly because you can see the market is currently consolidating. So possibly climbing back up to this zone again. Now, here is how to enter. Yeah, you have to wait for a change of character or a break of structure on the 1 minute time frame, okay, near your higher time frame zone. So if it is a trending market, remember the current price activity is ranging, okay, but in a trending market you have to look out for break of structure. Okay, you have to look out for break of structure, just like what we can see happening. You can see happening here at this point. You can see that price was actually trending upwards, right? Price was trending upwards. So in such a scenario, you'll be looking out for price to break the previous high. Once price breaks the previous high, of course, that's a break of structure. Then you can wait for a pullback and enter a buy trade. As price climbs up again and breaks the previous high again, you can look for example, you can see here, as price broke this high, we had a break of structure. You can see price went up, This is a trending market, right? A bullish trend. And then you can see here again, you can see that this high was broken again, right? And so on and so forth. Okay, so you should be looking out for break of structures on the 1 minute chart, and then you also look for a change of character. You can see that we had a change of character around here when the trend changed. We had a lower high form. You can see a lower low, I mean. You can see that we had a lower low. We had a lower low form around here. I'm just going to pick this. Yes, you can see around here we had a lower low form. So initially it was a trending market, a bullish trending market, and then there was a change of character, and you can see that the price started coming down. So you'll be watching out for these things, okay? And then you can confirm with one reliable indicator, such as the RSI, for example. You can just decide to add the relative strength index to the chart. All right, the relative strength index, is going to help you with, some confirmations. Okay. So, you can be looking out for RSI divergence, or maybe you can even use a moving average cross just for confirmation. So as price pulls back to retest the structure, right, you place a limit or a market order depending on the volatility. Then you keep your stops tight. So maybe if you are, after you get a break of structure and you have a retest, you can enter a buy trade and you set a tight stop loss below the, the BOS level, below the newly formed low. You can set your stop loss there, be a tight stop loss. Then your take profit can actually be around the next key resistance. That's for a buy trade. Okay, keep your stops tight, just beyond the structure break or recent week. So this minimizes your exposure and keeps your decision clean and calculated. Exits also matter just as much as entries. So you don't want to exit emotionally. Exit based on structure. All right. So you should be watching out for price hitting an opposing structure. You should be watching out for a clear shift in candle momentum. So if you are having a bullish momentum, you should watch out for a shift from bullish to bearish. All right. And then watch out for RSI approaching, overbought zones. If it's a buy trade, if it's a sell trade, watch out for RSI approaching oversold zones. All right. You can just simply use a predefined risk to reward ratio. For example, if you are entering a trade, just calculate your risk to reward. Ensure that your risk to reward is minimum of 1:2. All right. Or depending on your setup anyways, and depending on the market structure and momentum. All right. So the key is to get out with a purpose, not panic. A sniper does not shoot and pray. They shoot, confirm, and move on. All right. So this sniper entry and exit scalping strategy on the 1 minute time frame is for serious scalpers who want control. It's all about planning your entries, letting the market come to you, and executing clean exits without hesitation. So if this breakdown gave you new insights into how to handle quick trades with structure, do me a favor, smash that like button and subscribe to the channel if you want more fire content like this. Comment below if you want a live backtest or an indicator setup walkthrough for this exact strategy. Until next time, stay sharp, trade smart, and be the sniper, not the spray and pray trader.